Is it time to invest in Rivian? Well, let's take a look and let's see if the time is right. So, a quick overview of Rivian. What we got. Founded in 2009, they have their trucks, they have their SUV that just came out. They are a fairly large company. Their market cap is about $12.3 billion. No dividends, price to earnings ratio. They don't really have that, and they're currently losing money, $7.40 per share, right? Closely held is about 35%, and free floats is about 64%. So just to give you a overview of who owns and what in the shares, right? A couple of concerning things that we have here. Their total revenue is $1.6 billion, but their gross profit is negative $3.3 billion. So they're literally losing twice the amount they make. So a bit much, and they're currently just in the U.S., and that's a problem. So they've missed on their earnings every year so far. Although they're increasing, they have missed on their earnings, and you can see that they're not that strong of a company, I would say. There's no way to put it. Yes, they grew in revenue here, but I wouldn't say that they're the best out there. And you could take a look right here on this numbers as well, and you can see that they're growing significantly, especially since in 22 they grew from 95 million all the way to this is when they actually started producing cars and delivering, so 360 million. And on and on and on. But you can see that their profit margins, they are starting to lose less money, so they are on the right track, I'd say. And hopefully with time, they're going to be able to stop losing so much money. And maybe this will be a good company to invest in. But let's take a look. So the stock is beat up like a hammer here. It opened up at around $100. It peaked at about roughly 180, and then right now it's down to $13. So just to give you a rough estimate here, if you invested 100K at the IPO, you would only have right now about 13K. So you'd be down about close to 90% of your position. Is it time to invest in it yet? I don't think so. Let's take a look here. The stock is pretty beat up, and it was hanging around a pretty good time right here. And what's concerning to me is the market had a rally or so that's significantly more than it is right now, and this thing is still cannot manage to go upstream, right? And we're looking for something where it's significantly, it can't even break and create support. It's just getting beat up. It's kind of looking a little bit like Lucid. And Lucid is lucky they got investment from the Middle East company. This is been getting beat up just like Rivian has, and you can see it's just in a downward slope. I'd say that this is a little bit more, as far as investing, looks like a better price target because it's currently not losing as much money. That's pretty much the only aspect of trying to invest in this company, right? So if we go in financials, right, they're not losing $7.40 per share. They're only losing 77 cents, right? So they're only losing $1 billion versus $608 million. So they are making less money, but their profit margins are way better. and that's what matters. So we could look at the statements as well. You could actually look that they've been growing significantly, and their profit margins actually dropped very, very, very good since the last quarter in 2022 and Q4 in 2022, right? We don't have 2023 numbers out. They they should be coming out soon, so we'll see where that comes out. And looks like they're estimating a bigger revenues. So hopefully we'll get to see their estimate is negative $38 per share. So they're looking to grow their quarter. And it looks like they're forecasting into this year that they will be somewhere around 10 to 14% estimate of negative growth. All right. And you might say, well, what can I do if I were to invest in Rivian right now? How can we push this and actually get a position on? Well, I would argue that the stock is trading around $13.38. I would think this whole year is probably going to be a little bit rough for the shares and the stocks, and we're probably not going to see a very large gain. But if we are in, let's say, just in case that we are, what we can do is we can sell a $15 put here for January 2024. So you're giving yourself about 10 months for this thing to come back to about $15 in put. If not, you could just close this out and you would get a credit for $428. That would mean that your break-even price would be about $10.72. So roughly speaking, $10.72 will give you some more protection downside, and that would be about a 20%. You could have another 20%, and you'd still be breaking even on this position. The only downside to having a position like this is that you'll have capital about $1,000 locked in there, so you wouldn't be able to use the $1,000, right? Because it's locked into this position. A couple of downsides that we saw come out in the news here. They had a deal with Amazon, and Amazon wanted to order 100,000 vans from them by 2030. Unfortunately, Amazon has updated it, and they decided that they only wanted to buy this year 10,000. So a little bit of a buzzkill here for Rivian here. And another thing that we want to look at is they're making more trucks than they came out with their SUVs, by the way, and the SUVs actually look very, very nice, but they're actually making more trucks than they're delivered, right? So they made 7,363 R1T pickup trucks and RS1 SUVs during the 3-month production ended on September 30th, right? But they delivered only 6,584, right? So there's a little bit of a bump in the road here because you want to be delivering just the amount you produce, right? That shows high demand. But these trucks are not necessarily cheap, so the price of them kind of breaks the whole structure, right? And we have the pickup and we have the SUV. By the way, the SUVs I would say they actually look pretty good. Let's just put a fake email here. I don't necessarily want to actually create an account here. But you could kind of get the idea that 400 miles in range, right? And the SUV looks great. For a family car, I'd say the SUV looks wonderful. But I'm not sure it's time to invest in this yet. I've looked online, and there's definitely some issues with the vehicle updates, and some concern in the production quality as far as it goes. And I think that there's a little bit more, there needs to be a little bit more life in the stock before we could actually invest in it. I wouldn't want to touch this with a 10-foot pole yet. At least until they're actually not losing double the amount of money that they're making. Whenever they stop doing that, maybe we'll go ahead and invest in it. Yeah.